So, a lot of euphoria last night, and all around this 7.7, still very high. So, whilst it was a great result, dipping below what was the market expecting of 7.9, because it missed at a lower figure, the market absolutely roared, and we'll get into that in a second. But it's safe to say that inflation is somewhat contained, but downside is we've got a long way to go, right? It's got to get back down here before interest rates even start to come off. So interest rates will continue to rise, but maybe not as much, and they will still be held high until inflation gets under control, and then you would expect the interest rates to drop. However, the market is looking past all that work. That's going to take quite a bit of time. It's not going to happen in the next 6 months. It'll probably be another year or so before we get inflation. I mean, you can see that it took it took a year and a half to get up there. It's not going to get back there in 6 months, right? So that's, whilst the market loved it, and rightly so, it's a good result. I think they've taken it a little too far. Bonds absolutely smashed, right? So 10-year bonds down at 3.8%. Why? When the Fed will still continue to push rates higher. I think that's an overreach by the bond market, and we can certainly see the results here in the dollar index smashed, and therefore all the dollar pairs are having a great run. I think we might have a bit of a pullback. You don't go so fast, and we'll just have a look at crypto as an example. Absolutely crushed, but bounced back strongly overnight. So I would expect that we'll see either consolidation up here or a bit of a retracement. You're not going to have another major leg up again. But a pretty good result, and the stocks loved it, obviously. Nasdaq was up 7%, biggest gain it's had in since 2008, so 14 years. Nice run, and I'd say we're now going to continue this rally into Christmas, with the Christmas rally well in place. And again, it's not going to have another major leg up. It will consolidate and slowly make its way up. So look to buy dips in stocks, and look to fade any rallies in the US dollar. If the dollar manages to get back to this level here, look to fade it, or buy it against it. I don't know about the euro, but buy it against something that's going to be strong. And looking at the commodity market for the Aussie, the CAD, and the Loonie. Aussie, the Kiwi, and the Loonie. Copper's back up. The Chinese yuan roared again. Gold is having a great day. Oil sideways. Iron ore back up again. Gas up at smalls, and the commodity index also small. So the commodity picture is not looking too bad, but China's not coming out of COVID lockdown. So I think this is just more about the euphoria of, hey, the economy's doing okay because inflation's coming under. Well, no, interest rates are going to continue to rally, and we're going to have a recession, which is not great. So whilst the stocks we'll have a Christmas rally, I think next year they'll continue to weaken as you run into the issue of having a recession, right? And just looking at this chart, last time Nasdaq had a big run like this in 2008, you can see that the stock market then faded, right? So don't get too excited. It may not be lasting longer than this year. Anyway, all the best. Have a good weekend, and we'll see you next week.